Yes, good evening. It's evening now at my location. I don't know where you are. Wherever, no time zone varies. Others might be in the morning or evening. I'm greeting you from wherever you are. We are going to handle one very important topic, that is payroll computation, and this is for any entities or businesses, any kind of enterprises that employ staffs. You need to have payroll. You need to develop payroll, and you pay people using payroll. And this could be very good for the junior accountant, those who have finished colleges, universities, or those who are already in the field doing the practice. You can use it as a kind of refresher for you. Yes. Let's start. When computing the payroll, the most important thing that you need to take in considerations, of course, you need to the title. You have to read payroll, and you have to mention the month. Payroll for January 2025. Payroll for February 2025. So the name payroll have to appear there, and the period have to appear there. You can also mention the name of the organization. Is it a payroll for what kind of entities, what kind of business? Are you Oracle payroll for Oracle for January 2025? Payroll for Amref February 2025. You can also mention it just to specify. Then the next one here is, of course, you need to have the serial number. That is the first column. The first column have to be the serial number. And this is the basic for all the payroll. This knowledge cut across. We are going to get some differences in the issue where we can, the taxation. Taxation now differs from country to countries, but the principle remains the same. The principle, basically, it applies the same thing. That is the goodness of it. So whether it is a computerized payroll or it's a manual payroll, you are using Excel or you are using software, the principle still remains the same. So let's go on. First column have to be at least the serial number. A serial number is to specify the passions or the personnel. You might be having a payroll of 500 staff, 400 staff, 200 staff. Serial numbers are important. Number 1, number 2, number 3, number 4, down the road. And the number have to equate with the people who are on board for that specific month. One thing that we need to know, payroll changes is not the same every month. Some staff might come in, some staff might leave. So you have to make adjustment, you have to make changes accordingly. And always it is those one in the HR department, or those one who are in who could be in account section, depending on how you have segmented your department. So the next column have to be the name. The name you have to specify the name of the personnel. Can be Samuel, it can be Alex, can be Thomas, somebody. And this name have to commensurate, have to tie with the name that appears in a contract, in appointment letter, whatever you call it. Next, third column should now be position. The positions of that person in the organization. Is it executive director? Is it a driver? Is it accountant? HR officer? HR director? The next column have to be now the duty station. Where is this person stationed? You have to mention the duty station of that very person. The next one is a date of contract renewal. First of all, when does this person start? That is the very date. If it is a continuing staff, the active date of the contract renewal. That takes, for instance, if the accounting circle or your organization circle state that begin from January to February, so the date of the contract renewal will be the 1st of January. And the end of the contract is 31st of December. That's what I mean to say. So the 1st of January for this case should now be the date of the contract renewal. Therefore, the active period. I hope I'm not very fast. I hope I'm not very slow. Please, let's keep on. Then the next column is today's date. I don't know for your organization when you pass payroll out. Some organization passes payroll in the 3rd week, others in the 4th week, others in the 2nd week. If maybe you say you pay staff in the 3rd week, so in that very 3rd week, that very day, that's the date that you have to mention it. That is today's date, the date in which now you have computed the payroll for that specific month in question. So the next one is the next date of the contract renewal. This is exactly what I was saying. And this one always lies with your accounting period, accounting cycle, organization. So we have to have the period in which you begins and the period in which you end. So if now you follow the normal calendar year, the date of the contract expiry, if you start from January the 1st and ends on 31st of December, the date of the contract renewal should now be the 31st of December. Then the next one here is month left for the contract renewal. Remember, when now you follow the normal accounting period, and now say, take for instance, you are doing the month for the payroll for February. So if you are doing the payroll for February, the month, number of months, that is month left until contract renewal will now be 10. Because 12 months minus 2 months covered now will be now 10. This is important so that you avoid paying staff who are out of contract. All those columns have reasons why they have to be there, because they will help you to monitor the contracts for the staff. If the person's contract expires, EOC is not supposed to appear in payroll. These are clear facts. And it also helps you to follow up with the contracts of the staff who are due. I mean to say the contract of the staff who are coming to an end, whether they have to be renewed or they have to be notified. That is different topics altogether in HR. When the staff, and depend from countries to countries, when the staff contract is getting to the end, you are supposed to notify. You are supposed to again inform just kind of staff that please, your contract is coming to an end, so that a person prepares for exit. Failure to follow that, there are policies that applies, there are penalties that applies to that. And as I said, depends on the country in which you are. So you have to read your labor law from the Ministry of Labor in the countries where you are, and be very conscious of all those. So that's why you find the date of the contract, the date of contract renewal, the date for which the contract, the months left for the contract renewal. That's what I was meaning. So that is that. So month left until contract renewal. That is the column in which we are. Then the next column is now contract type. Remember, there are staffs, other staff who are on fixed term now until further notice. The other staffs who are on casual for some specific period of time, they are also there. You need to know the type of contracts you are issuing, or a kind of contract, the types of contract in which that stuff falls under. Now, take for instance, if it is a fixed contract, I believe that is a regular staff contract. That one is linked to the period. There's a start date and there's an end date. There's a start date, there's an end date. So you need to mention under these the types of contract in which that stuff falls under. For each line, one by one, you need to know that. So the next one is you have to specify the currency. It's very important. Currency here is important in circumstances where you use two currency. Even if you are not using currency, it is important, because at the end of the day, currency type have to appear in the printout of the pay slips, because it is a right of the staff for that very staff to know which currency he or she is being paid for. And also not only that, that should appear during the employment time, during the time for working on the contracts. During negotiation, you need to know now which kind, but in most cases, you are being paid. You are paid in the currency of the country, unless otherwise. So that is that. Then now here, pay attention. All those one here are names, the contract types, information about the contract, duty station, and the rest of it. This is now the next column. It's a column where now you have to be very vigilant. The rest are very relevant for HRS. But now this one here, for accountant, pay attention now. This is when a calculation starts. And by the way, you failure to properly compute the payroll. If you fail to compute the payroll, you overpay or underpay staff. It's not a good news for you as a person who's working in HR or the person who's working in a finance department. You have to take note of that. There must be effectiveness and accuracy here. So the next column is the basic pay. Basic pay, it is actually an agreed amount of money between an employer and the employee, where the person pays start from. An agreed amount of money between the employer and the employee, that the employee will be paid that amount of money. Basic by itself, basic, it is not all. There's still other smaller payment that will come after that, that will add to basic. And as I said, this one also varies from organization to organization, varies from company to company, depending on your policies. Basic means what you start with. Something that you start with. Something that you start with. And this one here we're talking about relating to payment issue. It's called basic salary. So the salary which is basic in nature that the employer agreed to offer to you and you have accepted. This is what we're talking about. Let's not complicate matters. All of us who are the audience are from different departments, and we are not going so deep into a specific profession. We want to carry everybody on board. So that is what basic pay. So take for instance, if the basic pay is say $1,000 US dollar, agreed, and it's ready, and the basic pay have to appear again in a contract. All what the information which is in the payroll are extract from the contract, extract from the appointment letter. Please let us mark that. At no instant any variation have to be there, unless if there's a parallel letter which is issued. Okay, now after basic pay, there might be some allowances. Depending on what you are doing, depending on the organization and the rest of it, there may be some allowances. You may, organization or the company can say, well, we are going to pay for your housing, for rental. We are going to pay for your transport, bringing you. We shall give you in terms of money. We shall not send a vehicle to you. Those sort of things. So after basic pay, depending on the organization, you can now add the column depending on the allowances. Now take for instance, if we agree that housing allowance is going to be paid, if we agree that transport allowance is going to be paid, then now after basic we shall have housing column, then we are going to have what? Transport column. They are called allowances. You can also add something like hardship allowances, security allowances, risk allowances, the way you like to call it. You can also add overtime allowances. You can also add when this is a situation, if the staff have worked more than 8 hours, you give now allowances. So by the way, those terms now changes. We have basic pay, then we have series of allowances, or if allowances are not there, you stop there. Basic pay plus allowances is called gross pay. When we add with the 1,000, take for instance, that very organization now give housing allowance $100 and transport allowance $100. So the gross salary should be now 1,200. Gross salary equal to basic pay plus all allowances. Forms what is known as gross salary. Those are now payroll terms. Please, this is very important. Let us mark that. Mark those key terms. We are going to use them. So we are already at the level of what? Of the gross salary. After gross salary, there are other, this also depends on the country. There are other payments. That have to come in, depending on the labor law and the rest of it. Other countries pays gratuity. Other countries now, they accrue national security fund. Now, take for instance, now you have already reached what is known as the gross salary, the level of the gross salaries. After gross salaries, if now maybe that country allows, say, gratuity to be paid, gratuity is already 1 month of the gross pay in a year. So if your gross is 1,200 per month, you need to compute 1/12 of that. That means now is going to be, you are going to inject the formula there. You are going to inject the formula there. You are going to prorate 1/12 of that gross pay is going to appear under gratuity. I don't know whether we are able to get that. So gratuity now, you insert the formula now. Whereby you divide now that month, divide by 12, and that figure have to be there. That means it is a figure for 1 month. And once you do it for the 12 months, it goes back. It is 1 month pay out of the 12 months. I hope we are following. Then now, after that one, we are going to get the adjusted gross salary. Adjusted gross salary equal to the gross salary plus other payment. And this one, other payment now, for instance, for this case, we now say gratuity. So it's going to be adjusted gross salary. Adjusted gross salary equal to gross salary plus gratuity. We are still moving. Column, there's still a lot of column moving on. Please, I hope those who are interested, they are noting it. If you are not noting, ensure that you keep on replaying this video. Until when you get the concept right. For those one who may be a junior accountant and looking for job. Remember, those are things that are asked on a payroll in the interview. You have to have the basic and you have to know. So the next one here, for countries that accrue National Social Security Fund, there is 8% and there is 17%. 8% is your own contribution. It's a contribution by the employer. Is the contribution by the employer. That is the 8%. Contribution out of the gross salary. So 8% time the amount of the gross salary. And we say the gross salary is 1,200. So you get the figure for 8%. Meanwhile, 17% is the contribution of the 17% by the employer. Again, 17% of the gross salary. You get that 17%. 8% plus 17% makes 25%, and is altogether called National Social Security Fund. National Social Security Fund is a kind of money which is being saved for you, just that when you leave the job, one day it will be released for you to take care of yourself at the old age. I hope I'm clear there. I hope in a simple layman language. That's what it means. So let's continue. It is a little bit hot here. Don't worry. Don't worry. Lesson is on session. We have already tackled. I want to still repeat. When we reach the gross salary, we say the other payments. If you add other payments like gratuity, you reach what is known as adjusted gross salary. After adjusted gross salary, we enter another next payroll, another next column called 8% and 17%. That's National Social Security Fund. 8% is your contribution as an employer. 17% it is the employer contribution. The two makes 25%. This is the amount of money which is kept for you to be given to you when you are old and after your exit from professional work. This is kept by government on your behalf. And the moment, remember, you have your ID. The moment you retire, later on, you are going to enjoy that money. Next. So, I hope we are clear until there. We are entering one term which is called employee total cost. Employee total cost. For you who is the director, or organization, you have to know the total amount of money which it will cost you to employ a single staff. It's very important. You need to know that, because if you don't want to know this, at the end of the day, you might be having a staff on board, say, for 25 years, and you have not been accruing the NSF for that person. That person may later ask for those things. Please ensure that you have to know those. So if you want to compute, you want to know the total cost, how much it will cost you to employ a person, it is equal to the basic pay plus allowances. If the allowances are there, those one makes what is known as gross salary. Then plus, say, other payment depending on your countries, say like gratuity. So gross salary plus gratuity plus 17% equal to total staff cost. Equal to total staff cost. And this one, I make exclusion depending on the country to country. This is basic, guys. This is basic, but what I'm releasing, I know is going to assist you, to guide you, so that you are on track. This is called total employee cost. It's very important. We need to know that. Now, the next one here, we are now going to taxation. We want to tax. Remember, any income, most countries, that is the law. Most countries, any incomes are taxed unless otherwise. You read again your taxation policy well and get to know which incomes are taxed and which incomes are exempted. So now, we want to now test now. How much is supposed to be taxed? Once you get your total gross salary, minus the 8%. Remember, the 8%, it is a contribution from you as the employee. It is not tax at this time. So the gross salary minus 8% equal to total taxable amount. I still repeat, because now it's important that we need to mark in gross salary minus 8%, gross salary minus 8% equal to total taxable amount. Gross salary minus 8% equal to total taxable amount. So now, once you already known the amount to be taxed now the tax rate applies. Remember how we are moving consistently, bit by bit, step by step. The next item now is now you want to tax now that you already know the amount. You already know the amount. Gross salary minus 8%. You already know the figure for 8% equal to total taxable. Now, if your country now you tax at 1%, you tax at 10%, you tax at 5%, you tax at 15%, you tax at 20%, you tax at 35%, now here applies. You have to tax now that percentage. You put that in percentage, you multiply time the amount that appears on the column of total taxable amount. Taxable amount times the tax rate now give you now a tax amount. Remember now we are going towards the end. We now want to pay. We are moving toward net pay. Before we move to net pay, we already know one amount, that is the tax that we are going to owe. We shall not now pay that amount to the employee. Remember, there is also one that we are going to owe. One that we are going to with the 8%. We now want to know the total deduction. The amount that we are going to deduct. We are going to deduct 8% because 8% belong to the employee, and we are going to deduct what? We are going to deduct the tax. The total deductible amount equal to tax amount and the 8% amount equal to total deductible amount. I hope it is clear. You already know the total deductible. If you already know the total deductible amount, you already know your gross pay. You just do gross pay minus total deductible amount equal to net pay. And that is the amount that now goes straight to individual bank account of the employee. And that amount plus what is in the pay slips must ties. And all those calculations have to appear in individual pay slips. The moment now you pays to the staff, you have to print that and you have to sign and give a copies to sign copy to the employee so that the employee also ties and see that the calculation is right. So that is that. So the net pay equal to gross pay minus total deductible. So that is that. We have come to the end of the payroll computation. I want to summarize in brief. Payroll computation start with the serial number. It comes to the name. It comes to the contract period when the staff is starting. It comes to the renewal of the contract, renewal of the contract's amount. I mean to say, renew the contract date. Let me start again. We say they start with a serial number. The next one is a name. The next one is a position. The next one is a duty station. The next one is the date of the contract renewal. The next one is today's date. The next one is next date of the contract expiry. Next date of the contract expiry. The next one is month left until contract renewal. Then the next one is contract type. The next one is a currency. The next one is basic pay. Then basic pay, now you add allowances depending on what types of allowances your organization gives or your company gives. Basic pay plus allowances give rise to uh, gross pay. After gross pay, there are other payments that comes in, like gratuity. If you add the gratuity, you come to adjusted gross pay. After that one, you start now computing NSF. 8% of the gross pay give rise to 8% of NSF. 17% of the gross pay give rise to 70% of NSF. Then you come to total staff cost. Total staff cost equal to gross salary plus 17%. Then you come to taxable amount. Taxable amount equal to the gross pay minus the 7%, 17% minus 8%. The gross salary minus 8% equal to taxable amount. Then now you come to PAT. PAT, that is the tax itself. The tax itself, the gross pay minus taxable amount. Tax amount equal to taxable amount times the tax rate. Get this one right? Tax amount equal to taxable amount times the tax rate. I hope that one is clear. Then now we come to now total deduction. Total deduction equal to 8% plus the tax itself. Then we come to the net pay. Net pay equal to gross salary minus total deduction. That will come to the end. That is the end of the payroll computation. So I hope it is clear. It is a long one, but anyway, I know sometimes for those one who already knows, it is an easy one. But those who doesn't, I would advise you to keep on. Replaying it time and again, and possibly you can also get to me on my WhatsApp +211 +211 +211 92414149. You can get me there. I can take you through the computation. There is one part left for the accountant, that is payroll journalization. That's going to be next topic that I'm going to handle. It's very important that you need to attend that. Payroll journalization. Remember, I talk of the payroll total cost. Payroll is just not made just merely to pay. It is also made to report costs. The director want to know the total cost of the total salaries of the total employees. You want to know. The donor want to know. That person or the entity that have given the money. That's why report is important. And payroll form one of the biggest costs of any entities. Form one of the biggest costs within the month-end closer. So once the payroll is done, the next one here, how do you enter it in the system? How do you report it? Because this is just what we have just covered is just for the payment. For the payment, individual payment, and for the payment of government, that is taxes, and for computing the 8%, the 17%, so that it is kept. This data is there. The next item now is how do you now use the payroll information in order to mass it together to make a general financial reporting, to generate the financial statement. So that is the next step which I'm going to explain to you. Otherwise, thank you so much for your time. I wish you all the best. I hope you have not dropped, and please ensure that you stay on track. And for you to get the next video, of course, you need to subscribe, so that we are going to tackle a lot of topics coming here. not only payroll, but relevant topics that are very important, and ensure that topics that you need me to cover, you can also write it down in a link so that I can tackle it. Thank you so much. I wish you all the best. Have a